of DFR. Oh, we're not live.
So good morning, everyone. This is the House Commerce and Economic Development Committee. Today is Thursday, February 12th. It is 10 o'clock in the morning, and we are here with the Department of Financial Regulations to hear their budget presentation.
Thank you for having us. I'm Kai Sampson, Commissioner of DFR.
David Cameron, Administrative Services Director of DFR.
And we have online all the deputies in case there are detailed questions about their divisions and their budget and operations. But I'll go through the materials that were sent to the committee. I think between Dave and I, we can handle most questions. But again, the deputies are available. Starting with the overview. We are, of course, as you know quite well, 100% special fund funded, and the funds are listed there. In terms of the high level overview of what's in this budget, it is a 2.9% increase over the current year. 86% is of that increase is driven by salaries and benefits. You'll see later that there's no additional positions in this budget. There's also no additional programming, so it's what I would call a level service budget. Overall, the budget, not just the increase, but the overall budget is 83% salaries and benefits, and consulting makes up a piece of that as well. Other highlights include that there was a savings in our space. This year, we moved into this fiscal year, we moved into a space that had been offline and renovated, signed a new lease, and footprint wise, I think we're a little smaller at this point, which, works with the hybrid environment we're in. And welcome any of you to check out. It's the same building, the same location, 89 Main Street, but our biggest kind of single space, we are kind of fractured a little bit on the second floor, but our biggest single area is totally renovated, and the HVAC was fixed. And so that's nice. So if any of you want to take a walk at lunch and come visit us, let us know and we'll set that up. Any questions on just a high level overview? Moving on, I know sometimes you get mission statements and vision statements of departments. I've always liked what's in statute for DFR, and that's 8 VSA Section 10. I won't read it. It's here, but it essentially, I think, captures well our responsibility to our domestic insurers around solvency, our responsibility and oversight of markets, but also in that second piece, that everything we do around individual entity and market regulation has to be done in such a way as to protect consumers against unfair and unconscionable practices and to provide consumer education. So I think that's educating consumers is a big part of our mission and something that I hope to enhance in my. Next slide shows, obviously not everyone. We have 110 positions. That's unchanged, but shows kind of organizationally how we're divided into 4 divisions. We also have the legal services division run by a general counsel, and a little bit different than many of the departments and agencies. Our legal staff is employees of DFR. They are not assistant AGs or they don't work up through the attorney general. So, and then, so we have the legal division, and then the 4 divisions: banking, insurance, securities, and captives.
Do you have any vacancies in those?
We have 10 total vacancies right now. So we're running about, is it 11 or 10?
I think it's 11.
Yeah, so we have an exactly 10% vacancy rate right now. And I think budgetarily we have a vacancy save, or, a vacancy saving 6.5.
6.5.
Yeah.
This is that.
You're actively trying to hire those?
Yes. Yep. Yeah, I'd say a good amount of them are in the captive division right now. I think Deputy Brown has 6 or 7 openings. So
that's right. 8, actually.
8.
Yes.
Are we doing a PSA for people who want to work with captives? Is that part of this?
Go ahead. I mean, do you want to talk a little bit about recruitment efforts or?
Sure.
Yeah. Okay. You want to talk about, I mean, Christine, Deputy Brown has a long history in the division, so she's kind of worked her way up like most of our deputies and leadership. And I think, Christine, if you want to just talk about the opportunities and challenges and, you know, what's different, but also how you're recruiting for at least those positions in your area.
Yeah, sure. I'm happy to. Thank you. So, you know, I think as we're all aware, there are some challenges in the workforce, especially with respect to hiring CPAs and individuals that have an accounting background, which is primarily where we got most of our talent in the past. So we're having to branch out a little bit, which has actually been a great opportunity because our most recent hires don't have the CPA license, but they have other licenses that complement our team. We have somebody who has underwriting experience, another person who we've hired recently with actuarial experience, investment experience. So they're rounding out the team. But where we're seeing some challenge right now is just in our recruiting efforts is getting people with the talent that we need to do our work because it is very specialized. And so, you know, we're needing to compete with industry as well. And so just making sure people understand the value proposition that working for the state has, because we certainly can't compete most times with salaries that are offered in the private sector in these specific jobs like accounting and finance. So, but we are actively recruiting and we have gotten, like I said, we've had some great hires recently. And we need to make sure that we're hiring the right people because what I've heard from our supervisors is, you know, training takes a lot of effort and time and they're happy to do it if we get the right individuals who are going to complement our team. But if it's somebody who isn't a good fit, it's a lot of effort to put in. So we're also needing to be a little bit choosy in who we bring on.
We're hearing that across industry, that people are happy to train for fit. And yeah, I don't think there's an industry we haven't heard that from as we talk to businesses across the state right now.
Yeah, it's a challenge, but the good news is we have a very tenured staff overall, and we are looking at ways, you know, to be able to streamline a little bit as we're recruiting so that we're not all stressed out and overworked. So I'm working closely with our supervisors and teams to just make sure that we're keeping up with the work because our reputation in the industry is reliant on the fact that we work kind of at the speed of business. So we don't want to be dropping any balls, but we're certainly, and we're not doing that. So rest assured, we're managing right now, but certainly will be helpful if we can start filling these positions.
You know, in talking about this, I'm hearing a lot about CPAs and licenses and things like that. And I'm thinking about some of the kids we have that are coming out of high school, coming out of college with maybe just a certificate or associate degree in accounting or something like that. Is there a path for them through you guys? Like, well, I guess I want to know is entry level.
Yeah, so that's a great question. A question I checked in with Christine on just recently, and Christine, jump in, but because it's similar on the insurance division and the captive division share job descriptions and career ladder. It's a very good career ladder in terms of and ability to promote with experience, but you do need, it's hard, I think, if not impossible at our entry level job, insurance examiner one, to hire right out of college. Is that correct? Because they require, I think it requires like 2 years of the equivalent of insurance operations experience. Am I somewhere close to the truth there?
Yeah, I think with an E1, there's a little examiner one, there's a little more flexibility.
And you
With-
wouldn't need the certification
Right.
yet, but there's an expectation to be on a path to get it.
Yes, that's
Sorry.
right. Yeah. But we do have, our industry has, a program. It's called the Vermont Captive Insurance Emerging Leaders, which Brittany Nevins from the Department of Economic Development helped, form, and they are very active with recruiting, and so is our department. Actually, we've been tabling at, the Grossman School of Business and at UVM, and we're also going to their career fair. So, we're working with industry, and the department is also doing our own work to try to recruit from colleges. But to your point, the high school outreach, I think, is really important to make sure that kids know that there are jobs here and they can stay in the state and get, some good jobs as that are here. They don't have to move out. So we're expanding our efforts to go to high schools to make them aware of the captive insurance industry.
And thanks for bringing up the University of Vermont. Like we're actively trying to tap into, like as of like the last couple of weeks, they've recently set up a co-op program for their business students, where they're, if you're familiar with co-op programs, like a full semester of work that they get credit for towards their degree. And we're looking at co-op opportunities to leverage that in the examination and analysis space, which is where on the insurance and captive end. So we actually have in the process of getting open postings because we have a budget for a certain amount of interns every year that's in this budget, and that's worked out well, rotating interns through the divisions. But what we can do if we get the right candidate is kind of reposition that budget to have, rather than someone rotating through all the divisions, say, you're a co-op student, you've got, more discrete goals in terms of learning a certain element of accounting or whatever. So we'll put you in, captives or insurance or even, bank and securities examiner positions. So getting the word out that way and getting student, and even if that student doesn't end up in the department, I think Vermont, as you all know, is a word of mouth state, right? So if they tell, they may come back in several years. I mean, they're just going to understand regulation and what I'm a CPA. So I've been in many different roles as a CPA, and I see what we do as regulatory audit. CPAs think in terms of, is it tax or audit, or is it controllership, like financial statement preparation. And what we do is regulatory audit for those positions. So, but I don't think there's a lot of awareness of that as a career path.
Is there any money in your budget that if you bring somebody on, they need more training, that you would pay for the training or help them pay for the training?
I think we do a great job paying for training. We don't often say no. And I don't know if you have any specifics on that, but we build training super important because, the risks in the industry change fast in all of those industries. And so we need to be on top of the training. We also get a really good amount of free topical training from the associations we're in, whether it be NAIC, NASA, CSBS. These are all opportunities where the states are working together to make sure we're all keeping up with industry and what the risks are. But I don't feel like we have a challenge accessing or paying for the training that's necessary to folks.
UVM, the only school, does Vermont State Universities have any programs that you partner with them as well?
I'm sure they do. UVM has I think the biggest accounting program. I know Norwich has an accounting program. Not sure if any of the deputies or Dave, if you're aware of any partnerships. I'm sure we've had interns, from many different, we had last year, it was like Dartmouth, UVM, and Case Western, thank you. It was on the tip of my tongue. So it was a Vermonter who was at Case Western and had a summer internship with us.
You know, we've worked with VSAC, setting up, loan forgiveness programs for students that in nursing, say, and if they stay in Vermont, they work for one of the hospitals, or then we pay, X amount every year on theirs for giving their loans. And I'm wondering if, because this is an industry it's not just needed by you, but we need more CPAs, I'm sure the banks need more. That I wonder if that's something that we should be thinking about as well, to create something in VSAC that would help provide student loans. We also have the Green Mountain Retention Program at UVM Office of Engagement that you might be able to do. If any of these interns, if they stay in Vermont and work, they'll get $5,000 loan forgiveness if they stay for 2 years. So that might be something.
Regardless of field?
Yes.
Oh, okay.
Yeah, so that might be something you can utilize.
In our recruiting, yeah. Yeah, thank you I wasn't aware of that. While we're on this topic, because we're talking about CPAs and we have a fair amount of them, and it kind of is a great kind of qualification to get into the open positions we have. There is a bill. So within the CPA industry, or nationwide in the mid 2000s, the states all moved. It's all state granted license. The states all moved to 150 credit hour requirement. And that was with an idea of, so basically, a 4-year degree plus 30 plus a year. So 5 years of credits. And that gave rise to a lot of these accelerated masters in accounting programs, but it also was a barrier to entry. Some of this is opinion, but I think that opinion is coming to fruition. Anyway, fast forward now almost 20 years, and states are going back to the old 4-year requirement because the options for business students that are kind of in that realm, it's just not creating the pipeline we need. So I believe 22 states at this point have a bill in process or have already gone back to the 4-year requirement. That's enough of a critical mass, I think, a 4-year degree requirement that, and this is for the ability to sit for the CPA exam and get licensed. And again, that's each state's kind of jurisdiction. So Vermont has joined these 21 other states. I might have the exact number wrong, and has a bill, and the Vermont Society of CPAs has put that bill forward, and I think it goes to ops. Yeah. Not sure if it's moving. I don't know if timing wise they got it on the Secretary of State's radar in time. So I don't know the details there, but I would say from our point of view and what we see, that would be a huge help to not be behind, not be a state who's behind on moving to be a state where you can get certified. I got certified with not needing 150 credit hours. Many people did. And anyway, that's something that I would be in strong favor of, and I think is something concrete that the sooner we move it forward, the better, because it is a workforce issue, without a doubt. We don't want to be a state that graduates like, well, I'm not going to practice. I'm not going to take my first job in Vermont because then I got to go do a whole extra year of school, or a state where a recruiter or where an employer has to say, I can't get this person certified, or I have to help them pay for school for an extra year. So anyway, if any of you have questions about that, I feel pretty passionately about.
I think we can have a conversation with Chair Byron.
Yeah.
Try to encourage them to take that bill up.
Thank you.
I have a question regarding recruiting. Have you run into any external barriers, the ubiquitous housing one that we hear about in industry and various other places? In other words, has there been anything outside the department that's been a barrier, such as lack of housing, something of that sort, for your specific jobs?
I'll let the deputies weigh in on that. I'll just make one statement that, this talent pool exists nationally, right? So housing is certainly a challenge. just getting people to, Vermont's a very different place and we love it and like it. We're all here, but it's a different place to recruit someone into. So very, very broadly, yeah. And, we could ask Joe how he decided to go from Virginia to Vermont as someone originally from New Jersey, but do the deputies want to respond to that at all in terms of concrete examples in a recruitment where it kind of maybe fell apart because of housing or external forces?
Hi, everybody. Mary Block, Deputy Commissioner of Insurance for the record. We had been trying to, for over a year, recruit for an actuary position. We don't have any actuaries currently in the department. We use contract actuaries, and we had been hoping to bring in a property and casualty actuary. Now, actuaries are difficult to recruit for even in the industry. So we went through jumped through a lot of hoops to get the salary up some and so forth. But had a lot of trouble attracting candidates, and had one in particular that, we were close on, but he just could not make the move to Vermont. The cost was just prohibitive from his perspective, given that we pay a little lower than the industry and would be asking him to move to someplace that was going to cost him more to live. So it has definitely been a problem from time to time. And, we've pretty much, when we are recruiting and having interviews are making sure that people have sort of explored the issues of moving to Vermont before they make a commitment to a position, because we want to make sure that they understand what, sort of what the housing market is like and so forth.
Go ahead, Mike.
So talking about, you have 9 positions open. I just did it because I was curious, the definitions of those positions. But when I checked HR in Vermont, I showed 2 positions, DFR Public Information and Outreach Coordinator, and then paid intern.
Mm-hmm.
So I must be looking in the wrong spot.
You should have open recruiting positions being recruited.
Yeah, I can speak for the captive division. We've had the positions open, haven't received or done interviews, haven't received anybody who's met our qualifications. So then close it out, wait a little bit, repost. So we're in that phase right now where there aren't any active positions, but one is going to be posted by the end of this week. And, we're going to start doing it again, but we, interviewing is also time consuming. And so we tend to, if we go through a cycle, we tend to take a little break and then we'll repost, in a bit. So that's why you're not seeing them. But we are actively trying to fill the positions.
And I'll say for me, because I think the bulk of the rest of them belong to the insurance division. We have 2 that we are checking references on. So we're pretty close to making offers. So they are no longer publicly posted. And then we have a couple of others that we are, like Christine, have not reposted. And I'm actually considering potentially changing those positions to something that might be to RFR them to another role that might be easier to recruit for, to be able to get people into other areas where we also need help. So sometimes the actuary position, for example, we've decided we're just not going to make it there. So we're going to restructure that position into an examiner position and fill it that way, because we can use those resources there as well.
And I know there's a securities position you guys know what the RFR process is? That's like through HR to a request for review probably stands for, but to take a pay grade, whatever, we'd like to repurpose this position into this. And there's a process for that, classifying it, et cetera. So securities has an open position that's going through the RFR. So it won't be posted or recruited for until we get that finished.
And so just to add, we're also taking a similar approach with some of our open positions that we've been unsuccessful, looking at our structure and where our needs are.
Has the return to office initiative affected your department?
We haven't had any that I can think of, any resignations. But you know, there's certainly you know, folks that are struggling with how to make that work, that we're working with. We've got enough flexibility, I think, that we've been able to, you know, move through that without resignations or big disruptions.
Yeah, thanks. Thanks for this. I'm struck by, you know, some of these positions are pretty specialized.
Yeah,
Actuaries, sort of high level examiners, that kind of thing. And I can imagine it's kind of tough sometimes to get those hired through, our civil service kind of thing. My sense, and maybe you confirm this or not, that when you get into that situation, you take a look at other ways that you can contract
right.
and get resources, I guess, from the industry that's being examined or actuarial kind of review kind of thing.
Yeah.
And then I don't know whether that's counted as revenue or whether it's, counted for somewhere else.
Right.
But it seemed, number one, it seems like that's a good way to make sure you can actually keep doing your job.
Yes.
And also maybe a cost-effective way depending. I mean, you need some of these folks on staff.
Yeah.
I understand that, but it's also if you have a one-off or maybe a 3-year exam, it's a good way to. My recollection, it was a good way to keep the job going without having to dip into.
Right. Yep. No, your recollection and everything you said, I agree with. And so that's our relief valve. So we have open contracts, call it a stable of contractors that are ready to do this kind of work, and they allow us to avoid disruption to exam cycles, et cetera. It is significantly more costly when we bill that through to the regulated entities, which we do. So there's a lot of downsides to it. We want to stay cost competitive, particularly on the captive side. But we also want to be cost efficient and, not be a drag in all areas. The thing I always wanted to avoid. So yeah, it's there. It's a relief valve. But the other downside to using contractors is that when you do an examination, it's a great opportunity to train new staff. It's a great opportunity to learn and be closer to the company. And if you're outsourcing that, everything that contractor learned for, X $100 per hour walks away. And we do pair our staff with, so we supplement with contractors, et cetera. But you're absolutely right. It's why we're not here with our hair on, freaking out because we have 10 open positions, because we can absorb that through our contracting capacity. But where we want to be is in-house as much as possible. It's better for the Vermont economy too, frankly, right? To employ someone that's revenue neutral essentially to the state. Not quite, but there's a lot of bill back of our employed folks as well.
Oh, yeah, sure.
So on examinations, yeah.
Is that counted as revenue or is it counted as
It's kind of
something else?
It's not a reimbursement of expenditures, kind of as revenue. So it shows on the revenue side.
So when we bill back, it comes back as revenue.
Otherwise, we wouldn't have the
And
spending
it's put in
authority.
a special fund or how's that?
In special fund, yeah.
Okay.
Yep.
Moving on. The next slide, speaking of staff, is our engagement survey results, the most recent. Since my first, go around with DFR, we've always enjoyed higher than average, in some cases, significant higher than statewide average engagement results. It's something we're proud of. I think we have good retention, good kind of camaraderie in the department, particularly within the divisions. No score is high enough. We're always trying to use this as a gauge and how we're doing in these different areas, but we're happy to see that at least relative statewide, we're doing well in terms of people's job satisfaction and all the different categories there. To me, what's most important is that, and I think this maybe helps these scores, is that for me, job satisfaction has always come from knowing that what I'm doing and what its impact is, toward the broader organization. And I think regulation and how it works in our divisions, I think we enjoy the privilege of what we do is pretty tangible, whether you're helping a consumer, whether you're examining a company for solvency and applying your skills there, or reviewing insurance policies and rates. These are all, so much of this is pretty easy to understand the consumer protection or regulation of a markets and what our function is. So I think that does help our employees feel engaged. It's not difficult to understand the importance of the role to Vermonters.
Am I correct in understanding that the growth one is a measure of people's satisfaction with their individual growth as opposed to maybe, the overall work?
Kudos to Dave for putting the definitions in here for me. Growth is I have the opportunity to learn and grow professionally. So maybe it goes back to the training discussion and the career ladders. I think for the most part, people can see a career within the department and advancement within the department and feel supported to get there. So the next two slides are who we regulate and how we regulate. And this is, given to you by division. I think maybe we'll jump to questions here. I guess I could summarize this, but you guys are so familiar with us. But, we regulate licensed individuals, licensed entities in all those areas. And then, there's usually a difference between our domestic insurers, domestic state chartered banks versus regulation authority we have over more on the consumer side for national entities. So that's what you see here. The one thing to call out, of course, I think you guys have learned this over the years with us, but it doesn't seem like, for instance, in insurance that we need 225,000 agents in the state of Vermont. But that's several categories rolled into that. But it's also the fact that these national companies who do a lot of direct phone stuff, they're just going to license their entire staff. And that's where some of the revenue comes from, or a lot of the revenue comes from. So from a compliance point of view, a company is going to, they're not going to say, oh, it's Vermont calling, let's send them over to Mr. Olson because he's licensed in Vermont. It's I would guess that through compliance and enforcement actions by the state, it's not worth the risk. So they just license everyone in all 50, their entire territory. And you see that across divisions as well. That kind of explains what may have been a question like, why do we have over 200,000 insurance licensed individuals in Vermont, in a state with 600, I don't know how many thousand adults, 400,000 adults, more, I don't know. So that's who we regulate, how we regulate. We talked about exams a lot. Those are, statutorily or accreditation required across divisions. Our responsibility to look at our regulated entities. Big one here, of course, is on the insurance end is the rates and forms. So forms are another word for the policy. So review of every, some level of review of every insurance policy and rate that hits the market in Vermont. So that's big in the insurance division. You'll see some data, 5-year averages around consumer inquiries and complaints, consumer assistance. As I said, that's something that I do hope to grow in our department. And because I think there's a lack of awareness of who we are and the assistance we can offer, whether it's a complaint or just navigation assistance. Like, if you need to call someone and understand the difference between an APR and another metric, like, we can help. So I'm fond of saying I want more complaints, not because I want more unhappy consumers, but because that would be a metric that more people know we're here to help. And I think that's something that we enjoy doing and can do more of. And I think the limiting factor is just awareness of that you can call us and ask questions. We have those functions in all divisions. Yeah.
Do you have enough staff to do the investigations and the annual or regular monitoring that you need to do? Like, we don't get reports on that anymore. And so I'm just curious how that's going. I have no insight into how that's going.
So market conduct investigations or like individual, you have a complaint against a company or?
Oh, I'm sorry, annual reviews of all of the institutions that you're required to review on a regular basis, banking and.
Yes. Yeah, and that gets to Rep Olson's comment that when, yeah, we're a little low on staff right now in the captive area, but they can leverage contractors, et cetera. So, yeah.
State banks, state credit unions, like, are you
You wanna-
feeling like they're on the cycle that they're supposed to be on, or is it?
You want to take that one? Do the banking piece, Aaron?
Sure. Yeah, we do have, sorry, my camera's not working, but we do have adequate staff to do all of our banks and credit unions. And I might have explained before, we also partner with our federal regulatory partners so that we also do joint reviews and we even alternate our exams so that we can all get a taste of what's going on in these institutions on a regular basis.
Just to follow up on that, I know over the years since I've been here, we've seen a huge decline in state chartered banks and credit unions. So is that in turn changed the need for the amount of staff that you have?
Yeah, that trend has continued. I think this presentation a year ago showed that we had 11 state chartered credit unions. We've had a lot of those institutions merge out. On the other side, our licensee population, the companies that we regulate, so the money transmitters of the world, those industries are somewhat dynamic and growing. I mean, we've had many conversations over cryptocurrency and virtual currency kiosk operators, and so that sort of also fills up our time, even though we have less of the charters that we need to oversee.
Yeah, understood. Sure.
I need to refresh my memory on something. So I know a lot of the functions that used to be in the department or in the Green Mountain Care Board, but I think I remember that some are still in terms of complaints and periodic exams, things like that. Is that with you or is that over?
So we have everything but rate review.
Right.
So we review like the QH, the exchange policies. The rate goes to the Green Mountain Care Board. We work with DEVA to look at plan design, to review the policies, et cetera.
And complaints, and I think there are some provisions for periodic exams of health insurance companies.
Yep, that's all with us. Yep. I mean, I think the easiest way to think of it is everything but the rate.
There we go.
Yep. Even external appeals, right, Mary? We still have that?
Yes, we have external appeals and we have rates for everything, all other supplemental health products. So Medicare supplement policies, short-term limited duration, hospital indemnity policies. The only thing we don't have is the review of essentially what you think of as major medical or comprehensive health insurance rates. Those belong to the Care Board.
All right. Next slide shows kind of the most recent completed fiscal year 25, where we landed in terms of revenue. Just for, we don't obviously collect the tax revenue, but in terms of the impact of this industry on the state total revenue, Dave put in the tax revenue from each of those divisions, entities in those divisions, and then the expenditures. So basically that, the budget for that year for our division, for those by division. So that's kind of a look into the most completed fiscal year.
Oh. It's looking budget.
It's in the black.
Yes, that's good. It would take a lot of budget increase to not be.
That's not the ask.
Correct. So then you see the budget overview. 10? skipping that one. All right, you like that one? So those are the organizations that we work across the 50 states and the different divisions and. Yeah. But slide 10 shows the high level breakdown of our current budget. Which gets to, 21.4 million. It shows you the year over year, the last year or the current year budget and where we are now. And it's again a 2.9% increase. And then we get into details. So I don't know if you want to add anything to this budget overview, and then you've got the slides that are too small for me to read in this piece of paper, but.
Yeah, no, I think it's a good spot to open it up for questions.
I noticed that, looking at the challenges that you had listed on slide 3, something like that, about, some of it was, just wages, some of it was just staffing. And then the last one was IT modernization. And I know that's expensive and it's difficult and all that stuff, but and so I'm guessing there's probably not much in the budget for that. But could you just give us a little, what is the challenge with your IT at this point?
So I think the number one thing we're working on, and we're in kind of the project planning phase with the Agency of Digital Services. So there's not really a price tag in this budget at this point, is really kind of document retention, or document management. We've got different things going on in different divisions. We're using, Microsoft SharePoint for things that's really not the best tool for. So that's the exploration of that project, to see, what can we do to make that more efficient. Is there another area within captives, Christine, in terms of just I think we're somewhat on an access database for licensing information, that there's better or tracking licensing, that there's some more efficient tools out there. Is that right, Christine?
Yes, thank you. That is correct. The tools that we are using now are pretty antiquated and unsupported. So at this point, it is important for the division. We have a lot of documents in our document management system that we rely upon, and then a database as well. So that's one of the initiatives that we're hoping we can get through this year or in the next couple of years to modernize our systems.
Great, thanks so much. Commissioner, I was looking to ask about, I think it was maybe a slide that pertained to the total general fund revenue. I think it showed us a few slides back just before the recognitions. And I think this is an opportunity for me to learn a little bit more about how the revenue is generated and the differences between revenues and expenditures. I'm wondering if the appropriate interpretation is that what you see with the rather narrow difference between revenues and expenditures in captive insurance is sort of the white glove nature of Vermont's work in this industry. And I'm also hoping to understand more about the difference between those two columns with respect to securities. Thanks much.
So I think, can you restate the captive question?
Yeah, is it the case that in seeing the relative closeness of revenues to expenditures, we're getting a sense of what it takes in terms of personnel, et cetera, to stay at the top of an industry, to sort of have that leading presence?
Yeah, and we do have that leading presence, and I think I'll let Christine jump in on that one, and then we'll go to securities. We are, I think, Christine, you used the term, at the pace of business. So, we have unlike a lot of jurisdictions, we have a talent pool and an infrastructure in place to very nimbly work with the industry or an entity that wants to make a captive. And so that's reflected in in those costs, but also there's just a fundamental difference in how, what the cost of having a captive in Vermont and any jurisdiction really comes down to from a domestic, and actually this works for insurance as well, right? The cost of being in Vermont as a domestic insurer or captive insurer is the cost of regulation, right? So that's what you see on the captive line. That exists on the insurance line as well. The benefit is mostly in premium taxes. And in captives, the premium taxes, 100% of the premium is Vermont premium because it's a Vermont entity, whereas, ABC Life Insurance Company in Vermont pays premium tax in all the 50 states they do business. Because it's a business to business and captives, 100% of that premium is subject to Vermont tax. What you see in the other divisions, and then I promise I'll let you go and add anything, Christine and Amanda. But what you see in the other divisions is fees and costs generated from the more transactional or products offered in Vermont, whether you're domestic or not. So mutual fund fees, which you guys are very familiar with because there was a recent increase there, being able to offer that in Vermont. And what we talked about with agent licensing and adjuster licensing, that's for any company that chooses to do business in Vermont. So hopefully I'm directionally close to your question. I'll see if Christine or Amanda want to color that a little more.
Thank you, Kai. From the captive perspectives, I think you really hit the nail on the head with respect to the cost of regulation. We have a staff of 32 when we're fully staffed, which does allow us to work at the speed of business, which attracts more businesses to come to Vermont. And that's, really the premium tax aspect, as Kai mentioned, that goes over to the general fund is where we collect most of our revenue. We don't have fines and penalties. We don't impose fines and penalties. Generally speaking, the companies that we regulate are compliant. Nobody's going way off the deep end where we would need to have fines and penalties because there's no consumer protection really with captives. That aspect isn't something that we necessarily have to worry about. So, and then, with captives also, we have a requirement to have an annual meeting in Vermont. And so there's ancillary benefits, I think, for the Vermont economy associated with captive divisions. So making sure that we're attracting business with the staffing that we have and, our ability to keep up with the work is really important.
So to make sure that I understand, just to make sure that I get this right, the difference in, say, revenue versus expenditures for securities is that's every transaction is generating revenue, or this is something that's got a lot less of that particular industry needs or element of what you offer. That division needs less personnel, and that would be true in any state.
Yes, I think yes. Amanda, you want to go, or Dave, you want to just go through, because I think it'll be helpful. Like in securities, the big revenue drivers, the mutual fund fees?
Correct. Yeah, it's about $46 million.
And let's talk, Amanda, talk about what that takes on your end to process and collect that money.
For the record, Amanda Smith, Securities Deputy. The mutual fund filings that we receive, they come through a national database to us, and we review those notice filing forms just to see the type of offerings that are taking place in Vermont and recording each type of filing that's received, including the revenue for each filing type. So that's at a high level how we process those filings when we receive them. I think that's what you're asking.
Great, thanks very much.
So my question is also on the revenue line. How do you set your prices and how often do they change?
legislature sets our prices for the most part, I think, is that, generally a lot of, I mean, when it comes to bill backs, like for examination bill backs, we have a process, NAIC, the National Association of Insurance Commissioners has guidance. They put out, their own kind of market study, and here's what an examiner should charge per hour but it is based on what, like we talked about, contractors kind of using that as one of the inputs. So for bill backs, we look at the actual cost of, what we're paying an examiner hourly with load and benefit and all that, but then also take as an input what contractors are charging for a similar thing. And then mutual funds, premium taxes, those are all set in statute. And
Is there an inflation piece built into that, or is it just a set?
into the bill backs or
No, into the prices that is the fees, the fees structure,
I believe so.
No, they're just set.
or just, thank you.
We'll get wind of, Ways and Means will get wind of another state increasing their fees.
Yeah.
We're increasing ours.
Yeah.
They're live.
There,
I don't think it's a
It's on the
secret.
secret.
Oh, I know.
there is an interesting and relevant quirk in the insurance space, which is retaliatory provisions. So, and very generally, each state says, if you want to do business in my state and want to register as an ABC or pay you're going to pay our rate, the greater of our rate in Vermont in statute, or what your state would charge my person to do business in your state. So some of that, so that's why counterintuitively, sometimes we're like, oh, we can make 10 more million if we increase this fee. It's like, no, because we're already getting that much because the other states are already ahead of us. So there's an escalation of revenue to Vermont, a self-balancing kind of thing happening there. And that, just since you find it interesting, I find it interesting as well. I think a lot of it is to prevent the motivation to punish out-of-state entities doing business. It's basically, hey, if you're going to do that to me, I'm going to do it to you. And so it kind of takes away the motivation to jack up your prices to just try to extract money from out-of-state entities.
Yeah, we have to realize too that any of those fees that the insurance companies or banks or any that are paying generally get passed along to the consumers.
For sure.
We can raise the rates to Vermonters too by being too greedy.
Banks always make money.
Do that.
I mean, I think that's true. I should pick up on that point. Like in insurance, a premium tax, it is paid by and remitted by the company. But when you look at an insurance rate filing, premium tax is an explicit component of the rate. It kind of operates like a sales tax. I mean, there's a pretty direct relationship to an insurance company and what their premium is going to be in each state based on what the tax is in that state. It's like $100 is what we need, but we need 102 in state XYZ because they have an additional 2% premium tax. It's more direct and transparent than in some other areas, Yeah.
Talking about the difference on the DFR revenue side on captives and then the expenditures is pretty close, but does the fact that you don't have enough staff, that you have to use contractors count for some of the cost of that expenditures? Where would it be cheaper if you had the staff?
Yeah, very generally, it'll be cheaper if we use staff rather than.
Same with, banking and insurance, all of them.
Yes. Yeah, I mean, contracted resources are at a premium,
Especially if they're having trouble finding people.
Right, yep.
Shit. We're all good.
Thank you for hearing us out.
I just wanted to recognize, you know, we were in conversation during the fall when federal issues were going on, people were being laid off, and we were worried about, and I think Representative Booton brought that to my attention. I passed it on to you about making sure that not by any rule or any regulation, but reaching out to our banks and insurance companies, just suggesting that, you know, if they know that some of their customers are federal workers that are laid off, that give them some leeway, don't foreclose on them, that type of thing. And so, and then I think you elevated that to the cabinet as well, so.
Yep, that's right. We were able to get public service to do a similar communication to their industry. But yeah, well, thank you for highlighting it. I think we ended up with a bulletin or notice around that. Yeah.
Facing another shutdown shortly.
Just in one area, I think, and doesn't shut down much because they got a ton of money in the last budget, so.
Okay.
Anything else? Very efficient.
I thought we had another 15 slides.
We've got the detail slides, which, you know,
Ask a question, since we have time. I'm curious to just to hear you reflect a little. You mentioned before that you're interested in doing more kind of consumer outreach and maybe financial literacy kinds of stuff. So I'm just curious, thoughts you have on that? Or...
Yeah, so I talked about like the UVM co-op program that we're making a play for. Like one of the opportunities we'll post there is for, you know, we'll also look for accounting finance majors, but if they have someone in the marketing concentration that wants to work with our outreach teams, you know, and maybe get a little more youthful in our outreach. That's fair. If I look at, you know, the generation of digital natives that are, you know, can really just have a better instinct for how to reach more people through social media platforms, et cetera. So that's one area. And then we have a grant program that we didn't talk about. It's in the materials here, but that program I'm excited about. We're sitting on 9 applications for grants. They can be up to $50,000 each. That money is put in there by statute from enforcement orders. So if we come to a stip and consent with a entity, that entity has the option to put up to 15% into a restitution and outreach fund. It's not the full title, but that's essentially what it is. We keep enough in that fund for restitution, which we've been able to provide some meaningful restitution from that fund. I think there's about $400,000 or $500,000 in there now, but we kind of reinvigorated that grant program. Joe was instrumental in that, along with Mary Richter in our department, working with the folks that do outreach with the other divisions. And we had an application out there that closed January 31st, and we're reviewing applications now. But that goes for, you know, it's nonprofits and schools, you know, so we're hoping to see, I haven't seen the applications yet, but we're hoping to kind of leverage that. Yeah, so that's just two areas there.
One more question. So sort of related to that is, I know one of the greatest needs of our smallest businesses, meaning, you know, under 5 employees, which we have, I don't know, 20,000 of them, something like that, is really about finance training and bookkeeping training. And I'm wondering if is that the type of technical assistance of a nonprofit that could a grant like that, or is that
not so much on the business end? It's really more not that that's not a worthy cause. You know, as a CPA, I you know, it's like owning a pickup truck. All of a sudden, you know, everyone who needs your help and wants to borrow that pickup truck. And when you're a CPA, everyone's going to give you your tax questions and your accounting questions. And so I know there's a need there, particularly in that small business segment where the scale isn't there to like really outsource and just hire, you know, a CFO or a bookkeeper. And it comes back to what we were saying about just pipeline and shortages in that area. And I had another thought on that, but it has escaped me. So yeah, it's really more, there's plenty of wood to chop and we've seen some horrible frauds, individual, behavior based, the money's gone, and there's, working together and, we'll work with the treasurer's office and the AG, good communication with their relevant staff on this stuff, but, there's so much I think awareness of what's out there and what the next emerging scam is. But yeah, we had a walk-in that was jaw-dropping to me, just how customized and manipulative and impactful it was. So that kind of motivates all of us to be like, let's do what we can to get awareness of what it sounds like, what it feels like when you get a call and you get manipulated into doing something, into thinking that the bank teller's the enemy, et cetera. If you see those real life stories. So it's really on the individual side. Financial literacy education and just kind of fraud awareness and education. And there's a lot happening now that the deputies can talk about, folks on their teams going out. I know on the security side and the banking side, there's a lot of outreach and school visits and senior center visits.
I think that's why it's important for us to working together on like suspicious activity, suspicious transactions that.
Yeah, exactly.
We'll definitely
Right.
work with the bank, work with you, help alleviate some of those issues.
I think, yeah, the walk-in example we have, that would have been, I think that would have been helpful, if not completely changed the direction of that. The ability for a bank to just not distribute the funds. Yep. Yep.
If I may, Amanda, Securities Deputy, I want to add that for the past, I'm coming up on a 2-year mark. The Securities Division has been on a mission to visit senior centers across the state, and we teach about fraud by playing bingo. The Securities Division is a member of the North American Securities Administrators Association, and collectively all the administrators come together to form outreach collectively for securities regulators. And we've had a great time and met an enormous amount of just wonderful Vermonters, teaching them about fraud through bingo. And that's been extremely beneficial to the community based on feedback that we've received. And we're hoping this year to be able to hit 3 senior centers. So that's something that is definitely always on our radar.
Actually, on that, I was curious if you all have strategies for kind of getting like the sort of general adult middle of like consumers that are not on the younger or older end, because I'm thinking particularly as folks are getting into caregiver roles and having to take over family finances and things like that, if there's like thinking about education for folks.
The forgotten Gen X.
Yes, the forgotten. That's pretty true, right?
Yeah, any Mary or Aaron or Amanda, any thoughts on anything targeted there or?
We were actually thinking about, so one of the things I've challenged the insurance team to do this year is we'd like to start putting out consumer, we don't know what we're going to call it yet, advisories, education pieces, whatever, like once a month about, just common insurance topics like I had a fender bender. What do I do now? Or how are insurers using AI? Or what does virtual adjusting mean? And all of the just some very simple topical issues that we're planning to start pushing out on a monthly basis. We have actually thought about in the fall prior to open enrollment season for Medicare supplement and Medicare Advantage, doing something for caregivers around, how do I help my senior? Where can I get resources to help them decide how to do this? It's not just us. We obviously answer those phone calls, but the SHIP plays a huge role there. And just making sure that the SHIP, the Healthcare Advocates Office, all of those resources are available. We've done senior centers on occasion to do Medicare supplement education and Medicare Advantage education, but we have had some conversations around what can we do for the people who are helping the seniors. I know I did it with my own mother-in-law, and it was, and I know you're right, I'm an expert, so to speak, and it was painful for me, never mind somebody who has no idea how to navigate this. So that is on our radar, hopefully for the fall, to think about how we might help the people who are helping.
Thank you for that.
That's great. The community bank, their community circle, a few years ago, I went to they had a seminar on on Medicare, and found it very helpful. And I don't think people realize that, we don't really have much to do with Medicare or the supplemental plans and so, when you get into that, you just think that you're just moving into something else. And, but there's a lot of different things that happen on the supplemental pieces of your gap insurance, and what's best to go with which plans do you go on, and so it is complicated, and especially when you get to be my age, you don't really want to think too much about that stuff, but you have to, and I think that's where a lot of seniors get caught up in getting into plans that they really didn't want to get into or don't need. So it's helpful. Thank you.
I have two questions, and I think I'm going to do the easier one first, maybe. I don't know if it's the easier one. When we did the insurance conference, the insurance companies were talking about climate mitigation strategies and how when it gets pushed out through insurance, because it saves the customer money, it saves insurance company money, and I know we have policies in the state around that, but how are we partnering within government? This is like, are we staffed adequately? Are we looking at this from a budgetary perspective? How do we make sure that we're able to take advantage of all of the best practices that we hear of nationwide? And do we have bumps when we look at how to integrate them because of our staffing or because of budgetary constraints?
Specific to the insurance division or
it is that specific topic that started the thought, but it really is all of it, right?
Yeah. I think Mary will have some thoughts on this too, but I'll kick it off. Like when we end up in discussions around that, one thing we see is that flood is our biggest, probably our highest risk here, not hurricane, not seawalls, and not wildfires. And flood, of course, is something that the commercial insurers aren't really exposed on. It's federal.
Individuals are, right, significantly exposed on, and our flood maps are old, and right. So there are a lot of factors that sorry, I'm interrupted.
No, I need more to be able to respond intelligently in terms of like direction. I'm not sure I'm answering your question.
But I think I'm wondering if there's a way that we can, it looks like Mary might want to say.
Yeah, Mary, save me.
Muted. She's muted.
Let me chime in a little bit because I'm probably a little bit closer to the issue than the commissioner is. So we are partnering. The flood issue, he's incredibly correct, right? The flood issue is really hard because flood mitigation is really hard. This year, the NAIC there's a bunch of committees. One of those committees relates to climate and climate mitigation, and that committee is going to have a working group that is going to be focused for the year on flood. whether it's mitigation or how to educate or whatever. So we have volunteered one of my staff, Rosemary Raska, who is our head of rates and forms for the property casualty side, is going to sit on that group and talk through what we might do as a state and nationally around flood education and so forth. We're already working closely with the Agency of Natural Resources and the FEMA support team that's here in Vermont and so forth on a bunch of flood issues. So next week, for example, Rose and I are going to do our second appearance at an ANR. They have a quick monthly meeting with municipalities, business owners, whoever wants to drop in. It's a drop-in call. And we're going to do a presentation on flood again. We've done that there. We're doing some work with a Waterbury flood group just on educational information. We don't control flood insurance for the most part because most of that is unfortunately federal. There is a small private flood market, and I think some of the work that will happen at the NAIC is there anything we can do to increase that private flood market? But a lot of it is around education. And so we'll continue to do that work wherever we can to educate people about the things that they can control. Like, if you have a car and you have comprehensive coverage on your car, it will cover, a flood will be covered. If you have a house, even though your homeowner's insurance won't cover the flood itself, if you have water backup on your homeowner's insurance, it will cover the backup that happens if drainage systems get flooded. And so trying to educate people about the things they can impact other than a straight flood policy is something that we're working on.
Great. And then also, right, helping to craft state policy so that we're doing things well to mitigate for flood damage, right? Because that will save all of us.
Yes.
Money and time and heartache and all of the things that go along with loss.
Yeah. I mean, unfortunately, there's a lot of mitigation programs out there, but they're all, I hate to say geared towards the easier things, but right, there's very specific steps you can take to protect your roof in a hurricane, or to, protect your house in a wildfire area. Flood, not so easy.
Just thematically, I was on this working group that I believe the treasurer's office was charged with before I came back to the state. And it's a lot of really interesting discussion about there's a lot of money available when there's a flood, FEMA, flood insurance, and that just fixes what was broken. And how do we influence either at the state level or federally get waivers, whatever. And I know all states are working on this. Like, instead of you sending me $80 million next time there's a flood, or billions of dollars, and we know there's going to be another flood, can we get a couple $100 million now to fix something so that it doesn't cost that much next time? And so it's really just that time value of money, which is what investments are. It's quantifying those. And so that was a really interesting discussion. I think, VLCT, natural resources. So I thought it was a treasurer's office working group. I'm sorry, I don't remember the specifics of it.
Every time we rebuild what was there without doing something different, we're
perpetuating.
We're missing an opportunity to mitigate for future. And so my other question is, we value so much as a state, your department, all of the work that you all do. Not only are you helping to keep Vermonters safe in so many ways, all the consumer protection, but you're also bringing in a lot of money to the state. And I worry a lot in times of tight budgets that we're penny wise and pound foolish, and we're not investing where we need to invest to ensure that the programs that we have that are strong and working well and bringing in positive, dollars, but other things too, right? And so I'm curious how much you can talk about that when the budget is being developed, and how difficult, how many difficult decisions had to be made. And as you're talking about, restructuring positions, trying to get them at the right level. Is that really hard to do? And are there things, how do we help? How do we support? How do we do the things that need to be done in order to ensure that we're still where we need to be going forward?
Well, thank you for the kind comments and the recognition of the work of the department, which is also, a result of the industries that we regulate and the economic impact they have on the state. In terms of budget development, I think when it comes to staffing, we're focused on recruitment and retention, not growth. In terms of, as you were saying that, I was like, hold that energy for a future year when we may need project money for these IT initiatives. At this point, we're in the planning stage, but, there's different ways that we would finance that.
But that's good information for us too. So when we make our budget letter to appropriations, that we will put that in there, that, there are things coming that DFR will need money for.
Right.
And let's just keep that in the back of our minds, that when they come to you, it won't be a surprise, and be ready to.
I mean, for future years. Yeah.
Be ready to appropriate some of those dollars that they bring into the state.
Right.
To reinvest back into the department again.
Yeah. Yep. And I think in terms of how this committee helps, it's, awareness to, the sensitivity that we may have when a fee wants to go up or something, right? And if the experts behind me say, we're concerned about that suppressing demand, or maybe someone says, maybe I don't need to license all my agents anymore in Vermont. Maybe I will take a scalpel to that and just look at, understanding, the impacts and the knock-on impacts within the industry or the availability of financial services if costs go above a certain amount. So that's something that, you saw our purpose and statute, right? We want to keep competitive market a relatively easy and cost competitive place to do business, because people don't do business in Vermont because we have 15 million customers available. We don't, so we start at a disadvantage there. And then the same concept goes on the captive end, right? Christine and team are very sensitive to the balance between being the go-to place for professional, dynamic regulation with a good reputation globally and what that costs versus not pricing ourselves out of competitiveness when it comes to captive domiciles. So being, and then of course that Joe and you guys are talking frequently, it's just keeping those lines of communication open and being able to have offline conversations about difficult issues and sharing that. And we've done that. We've done that. So that type of conversation is, and knowing we have a committee that gets us, so to speak, and having you trust us. And I think you do. So, yay.
We're talking about some mitigation that I think a number of years ago, and they're all blurred now, but we, on PNC, I think we were talking about insurance companies that allowing them to invest products that they could purchase or help purchase with their customers, like, a shut off switch to their water system, so that if a pipe bursts, it's not going to flood their house and things like that. And trying to remember if there were issues with that or not.
Mary, you got?
I got it. So we did change statute a few years ago now, so the unfair trade practices statute 4724, we changed to allow, and it was a national model that was developed at the NAIC. We changed to allow more of that because there is an anti-rebating statute, right? Insurers aren't supposed to give people things to get them to buy policies. That's just inappropriate. So there are provisions in there now that allow insurers to do what we refer to as value-added services. And we have a process for approving those. So yes, some of the PNC carriers do give those shut-off valves, for example. Particularly in cold weather states, they like to do that because when pipes freeze, having that alert. Some of the life insurers, like John Hancock, for example, has a huge program around wellness benefits, things that help people live longer. Because if you're a life insurer, the longer people pay premium, the better that is from a rate perspective, right? So yeah, we have seen those come through, and there's a wide variety of them. We obviously review them to make sure that they have to relate to the risk that the insurer is insuring. And they can't be crazy, right? You're not going to give somebody a car. It has to be reasonable. We have to make sure it's not going to affect solvency. And so we do that kind of analysis as those things come our way.
Is there any place where that information is housed that you provide it on your webpage? Because I would think that people that that are looking for an insurer might look at that and say, geez, they want to help me stay safer. I want to make sure that my property is made safe. Maybe I'll check them out.
No, we don't have it on the website. I think it would be a little complicated because it is very dependent on the type of policy and underwriting and so forth. So we could put it out there, but then it might be useless for a person because they don't meet criteria, or that's not the right kind of policy for them, or whatever the case may be. So it would be, we don't put it out there. It would be, I'd say, fairly complicated to do it in a way that wouldn't wind up misleading people.
This is a place for insurance agents to shine.
Yeah.
Yes.
They know the products, they work with several insurers, and they can suggest things to insurers too. Hey, in the Vermont market, there seems to be a real appetite for ABC, and as can we, and as can you. But I think agents, that's their opportunity to shine. So we can think about ways to incentivize more of that.
Maybe that's a question and an answer that you provide when you're going out educating people, is that there are some insurers that provide this, and talk to your agent, right? Because I don't know if anybody in here really knew that. If any of the committee members knew that some of these PNC companies, insurance companies, provide those types of rebates.
Yeah, and there's a requirement in Vermont law. If you look at your policy, which I won't ask people to raise their hands if they've read their policy, but there's a notification of available discounts requirement. Right. But it's a good point. That's the kind of, when Mary talked about consumer bulletins or outreach, and we see other departments, other states doing this, and we want to escalate that. But it's like, what are the top 3 basic things that are easy that you can do, and it's like, look at that disclosure, and, oh, my kid's a straight A student, let me call, make sure I'm getting that discount, or whatever it is, safe driver, stuff like that. Like really quick hits, quick wins. And, that's where we want to focus some of the, kind of consumer bulletins that Mary was referencing.
I think, the discussion we had last year on uninsured motorists, better understanding. I think we all had a better understanding after we had those conversations of just what that is and how much it pays.
And the tools are there with social media and the web to make really digestible, short form, somewhat entertaining bits of information that can really help.
Yeah.
Now you've set the bar high.
I know. I need that college intern.
Entertaining, that's really high.
Yeah. Well, you're right. For insurance and financial services, it's really high. Come on. TikTok and Instagram Reels, I've seen the most boring things be entertaining. So,
You just gotta use animals.
yeah,
Exactly.
animals and
Eat tiny things.
right. Dump ice water challenges. I don't. We'll think of something, and we're open to ideas.
Anything else?
Thank you for a good discussion.
Thank you, Deputy Commissioners. Thank you as well, Joe. Thank you all. Thank you for what you do.
thank you for supporting what we do.
Thank you.
Thank you.
Had an early lunch today, like a year. We're back at 1.
Private colleges.
The private colleges, that's right, so.
And then more budget after
And
that.
then the labor budget after, Department of Labor. So we're working on next week's agenda. Continue talking with ACCD, we need to hear from tourism, then I think I'd like to explore the grants that DED puts out. To better understand those, and I think I'd like to understand how they vet the recipients of the grants. I know there's a process, but I think we need to make sure that there is a vetting process there, making sure that the grants are spent the way they're supposed to be spent, and what's the return on investment we're getting, that type of thing. So I'm gonna try, I think we're getting close on 205. We'll hear tomorrow, we'll hear the suspicious activity language that Jonathan's been working on with the banks and who drafted that, Jonathan?
Maria.
Maria? Okay.
Yep, Maria.
Okay. So we'll hear from Maria, I think, after the floor tomorrow.
And an updated coerced debt
Yeah.
language.
Yeah, I think we're getting pretty close to these bills that we want to help. Then CTE is a whole nother animal that we need to really work on and think about. And 211 is another one that we need to work on too, so we're not shy of work, that's for sure. So any questions? Okay, so we'll be back at 1. And then